Good morning, America. It is me, Kenny Polcari, your host of the party. And here's today's market commentary. Everything you need to know, right? What happened yesterday, what is happening today. Yesterday, investors remained confused, right? Inflation and supply chain issues continue to cloud the outlook, causing investors to sell stocks. Joey now asking the Asian nations to coordinate a release of their strategic petroleum reserves to help bring down oil prices. We continue to wait for a Fed chair nominee. Larry Summers? Oh no, when did his name come in? And will the Bank of England have first mover advantage after inflation is out of control in the UK and they have a policy meeting in December? And what are we having for dinner? Well, we're having dessert, and it's the mud pie because everything feels a little bit muddy right now. Look, investors are tiring. They're tiring of the inflation conversation and the challenge it poses to both the U.S. and global economic rebound, assuming that the rapid pace of inflation that is now enveloping the U.S. and Europe will force the Fed, the ECB, and the Bank of England to raise rates sooner than the market expects. Remember, the U.S. assumption is June of 2022 is the first rate increase, then September 2022, and possibly a third one in December of 2022. The ECB and Bank of England don't even have a schedule yet, but that's sure to change in the month ahead. Christine Lagarde, president of the ECB, has said she is waiting for the Fed to take the lead in deciding when to raise rates, and then she would follow. The worry now is that the U.S. schedule is incorrect, that the Fed may announce a new, faster tapering schedule in January of 2022, which will then translate into a move in interest rates sooner than June. And that is what's going to catch investors and the markets off guard. And that was the narrative yesterday, right? Even as we got better than expected earnings from Target, Lowe's, and TJ Maxx, right? What was the common denominator? Inflation concerns eating away at margins, supply chain concerns weighing on profits, and that ultimately higher prices will cause consumers to slow their spending. At the end of the day, the Dow lost 212 points or 0.6%. The S&P was off 12. The NASDAQ gave back 53 points. The Russell lost 28 points or 1.1%. And the transports were way out in the lead, losing 240 points or 1.45%. 10-year treasuries ended the day at 1.6%. The VIX rose 4.5%. Oil dropped another 3% and continues to come under pressure, falling to 78.12 as some in Congress pushed Joey to release oil from the SPR to help bring prices down. And now as Joey apparently begs Asia to also release oil from theirs to coordinate and assist in helping to bring prices down. This, I remind you, that only 2 years ago, the U.S. was the world's largest producer of oil, was a net exporter of the black gold, keeping prices in the $40 range for the world to enjoy. But then something happened. I'm not really sure what happened. I don't know, maybe you got a thought. Gold has found a new trading range, 1850, 1870, as it anxiously awaits the next data point to figure out the next move. Will it push higher or will it push lower? You need to stay tuned. News that now Joey is blaming U.S. energy companies for the spike in prices is almost laughable. He is the one that shut down the pipelines and the permits. And so what did he or his administration expect was going to happen? Demand is up, but he's constrained the ability to supply, right? It's Economics 101. I wonder if Joey skipped that class at the University of Delaware or if they even taught basic supply and demand concepts. News that Joey continues to, Lonnie continues to sell stock, has already done absolutely nothing to stop investors from buying it. Tesla rallies another 3.3% to end the day at 1,090 yesterday. This as Lonnie Musk sells even more stock. Visa got slammed yesterday, falling nearly 5% to $205 a share after Amazon said that they are going to stop accepting Visa's UK credit cards due to their high fees. This is not new news. This fight's been going on, but the announcement yesterday brings closure to that ongoing conflict. Economic data today saw housing starts fall by 0.7% versus the expected increase of 1.5%, while building permits blew the roof off the house, rising 4% versus the expected 2.8%. So starts are slowing due to supply chain issues. Think lumber and appliances, wallboard, roofing, tile, flooring, appliances, fixtures. Yet home builders are applying for more permits due to ongoing demand for housing. And so it's a mixed picture. Mortgage apps also declined by 2.8%, which they credited to a rise in mortgage rates. But I would also dare to say it's a more seasonal, right? It's December, it's Christmas. Who's really moving and buying a house now? But you go with whatever makes you feel comfortable. Today's eco data includes initial jobless claims of 260,000, continuing claims of 2.1 million, leading economic indexes, and the Kansas City Fed manufacturing of 28, which would be down a little bit from 31 last month. This morning, U.S. futures are attempting to take back yesterday's losses. The Dow's up 65, S&P's up 15, Nasdaq's up 90, while the Russell remains on the flat line. Macy's just reports, and guess what? Yeah, they blew the roof off the house, and the stock is trading up 6% in the pre-market. I guess yesterday's negative story about inflation and supply chain and margin pressure are not applicable to Macy's. At least, not today. Investors are going wild for Macy's. We still don't have a confirmed nomination for the Fed chair, but we're told to be patient because it's coming, right? In the end, they've done a good job of really testing the markets with the back and forth to see how investors would react, right? Between Brainerd or Powell. Either would be fine. Apparently, the market seems to be okay with either. The wild card that popped up yesterday is Larry Summers, a long shot for sure. Because someone now leaked that name to the press, I think to divert the conversation and also to see how the markets would react. The administration was quick to poo-poo the idea, so investors do not appear to be giving it any credence at all. But it is out there, a long shot for sure, and we all know how much Larry wants that job. The fact that his name is once again in the mix is causing him to salivate, but Lizzie and Bernie are not going to allow that to happen, so don't go betting on it, right? They're pushing for Lael, and they are pushing and pushing. European markets are also treading water. Currently, they're mixed around the flat line. Investors there considering the latest readings on inflation in the Eurozone and the UK, both elevated. And the speculation now is that the Bank of England is going to have first mover advantage in Europe and announce a change in policy, in interest rate policy in December to combat rising inflation. Cryptos remain under a bit of pressure. Bitcoin's broken 60,000, is now trading at 59,500. Ethereum is trading back at 4,200. The S&P closed at 4688 and remains well within its recent range of 4630, 4730. In that 100-point range, it seems to just bounce back and forth. Expectations for a strong holiday shopping season remain front and center, and calls for S&P 4800 by year-end remain alive and well. Next week is Thanksgiving, so expect volumes to retreat as people celebrate family and friends, and lower volumes can create more dramatic moves, right? So just remember that. Remember that if you see dramatic moves next week, right? A good, well-balanced portfolio is what you're going to need to weather the storm. Nancy is pushing for a House vote next week on the $4 trillion human infrastructure package but before Thanksgiving. Let's just see how that goes. Now, look. The CBO has yet to release its scorecard on the cost of the country, which is why I quote it as a $4 trillion bill, not a $1.7 trillion bill. That's all smoke and mirrors. But it will succeed in such increased spending by the government that we're going to have 80-style inflation will become the new 20-style inflation as history repeats itself. Remember, you can text the word invest to 21,000 on your cell phone to get my digital business card. Feel free to download it, send me off an email or a text, give me a call. I'm always happy to engage and talk about markets, planning, thoughts, concerns, whatever's on your mind. You know, you can follow me on Twitter and TikTok at Kenny Polcari is my handle. And on Instagram, you can get me at Kenny P 1961, which was my badge number when I was a member of the New York Stock Exchange, also the year I was born. Okay, so what are we having for dinner? It's not so much dinner, but it's dessert, right? With the holidays coming, you always need some dessert on the table after you eat the turkey and all the vegetables. And considering what it feels like right now, it's a little bit muddy out there. What better to serve than the mud pie? Because it's simple to make. All you need is a freezer. And you need the ice cream. And you need the Oreo cookies, right? But here you go, because this is what you're going to need. You need the Haagen-Dazs coffee ice cream. You could use any kind you want, but coffee ice cream is what I use, right? A half a package of Oreo cookies. You want them crushed. You want 3/4 a stick of butter melted. You want a half a gallon of the Haagen-Dazs coffee ice cream softened, right? You soften so you can spread it around. For the topping, you want a package of semi-sweet chocolates, 2 tablespoons of butter, and 1 tablespoon of brewed coffee, right? Whatever coffee you want. You want espresso, it's going to be, more bang for your buck. You want regular coffee, go for it. So to start, you want to make the pie crust, right? So you want to mix the crushed Oreos and melted butter in a large bowl. And using a tablespoon, press this mixture into a 9-inch pie plate, right? Just press it and create the base. Now you want to take the softened coffee ice cream and you want to put it into the pie, right? So scoop it out. It's got to be nice and soft so you can work with it. And put it into the pie, at least like 1.5 inches of ice cream. Then you want to put that in the freezer because you want the ice cream to get hard again. So you got to put it in there at least for 2 hours. Now, you're ready to make the topping, right? After the ice cream is hardened, using a double boiler, you want to melt the semi-sweet chocolate, and then you want to add the melted butter and the coffee. You want to stir it till it's completely melted and all combined. Remove it from the heat. Pour the fudge, because it's like a fudgy kind of topping. Pour the fudge topping over the pie, wrap it in plastic wrap, and put it in the freezer again until the topping gets solid, right? Won't be that long. Maybe it's a half an hour. Maybe it's half an hour, 40 minutes. And then when you're ready to eat it, you want to take it out of the freezer about 10 minutes before you're ready to eat it. This way it softens enough that you can cut it, but it's still hard enough to be ice cream and it's not just mush, right? It's a great addition to your dessert table on Thanksgiving. Simple to make. The kids will love it. Even the dads will love it. It is one of my favorites. I don't eat it a lot, but I always do eat it around the holidays because I think it's great. In any event, look, today is Thursday, and the sun is now coming up behind me. It's going to be a cloudy, kind of rainy day here. I wonder if that's going to translate into a cloudy, rainy day for the markets. We'll see. In any event, I'll see you tomorrow. Take good care.